Good afternoon to all participants of this year's IFCLA conference. We are nearing today's end with our last session of today, but this last session covers I think, a very interesting topic: blockchain and tokens from the murky backyard to conventional industry. Blockchain and its legal implications have been haunting us now for several years. But as with many developments in the era of digitalization, one wonders whether blockchain is yet just another buzzword and will perhaps be forgotten in 10 years, or whether we as practitioners have to get accustomed to its uses and its legal pitfalls. This is the reason why we decided to check out in a practice-oriented approach in which areas blockchain has already matured to a usable and actually used technology. We have chosen 3 different areas, which you perhaps may not have on your screen as the primary scope of application of blockchain applications. The first one is the international shipping industry. And I'm very happy to have Christian Albrecht as a speaker for that topic with us. Christian has been passing his legal studies at the University of Bayreuth in Germany and at the University of Bristol. And he has passed his LLM in international commercial law. And since then, he has been focusing on international maritime and transport law. He is research fellow at an international maritime law firm in Hamburg, naturally, because Hamburg is in Germany the focus for everybody who is doing anything in maritime law. And his focus there is on digitalization. Our second talk will be about real estate. And I already see some of you wonder about how can we use blockchain, especially with real estate tokens. And I'm happy to greet Alexander Rappat, the co-founder and managing partner of Black Manta Capital Partners. He is a legal and corporate finance expert, co-founder and managing partner. Black Manta Capital Partners is a full-service financial service institute for all technical, financial, and legal aspects of security tokenization. Alexander, amongst other activities, is board member of the European Super Angels Club and lecturer at the Business Angel Institute. I'm pretty sure that he can give us a truly first-hand inside view on blockchain applications related to real estate transactions. And our last talk is about digital currencies. Now, here you are back on square one. That is where we all know where blockchain had its first practical uses. But Hans Koning, a co-founder and chair of DigiByte Foundation from the Netherlands, is perhaps most appropriate as a speaker to bring us up to speed about what today cryptocurrencies are really worth and what we have to look about. The goal of the DigiByte Foundation is to promote and support clearly the DigiByte blockchain, but also to stimulate the development and worldwide adoption of the principles of decentralization in general. DigiByte is a cryptocurrency, but it is more than that. But I will leave it at that because Hans will surely be better able to explore with you the present state of digital currencies. Let me just point out that Hans presently is working on the topic governance in the public blockchain at the University of Amsterdam. Before we are moving in on our first talk, I just wanted to do a bit of housekeeping. If you see at the bottom line, you will see 2 buttons. One is for chat, That is everything you want to say he and hello to everybody else. And if you have a question to one of the speakers or a comment, please use the button to the right side, the F&A. We will be having a short Q&A session after each presentation. If there are specific questions regarding this talk, and we will have a panel discussion at the end of our 3 talks. But with this, I'm close with these introductory remarks, and let's move to the shipping industry. I presume that most of you as participants will not be closely connected to maritime law, but I'm pretty sure that all of you have been seeing in the last weeks in the newspapers the vast ports of China, the container ports with millions of containers. Now just imagine that in each container there may be thousands of different packages, perhaps not owned by one sender, but by several senders. And then think about these parcels coming from some place in a mid-sized town in China and going to a mid-sized town in France. This is a whole chain of freight forwarders. And you can imagine how many billions of contracts and documents you will have if you just take one look at one of these ports in China. With that, I'm handing over to Christian. I'm happy to have you here. The floor is yours.
Thank you very much. Good afternoon, everybody. I will just go ahead and share my screen. All right, you should be able to see my screen now. It's an absolute pleasure to be here today and talk to you about blockchain and shipping. Thank you very much to IFCLA and also to Anselm for inviting me here to speak. It was certainly even better if I could have spoken from Barcelona, but as the situation is how it is, I'm happy to talk from my home in Hamburg. As I said, I was invited here to shed some light on the recent developments regarding the use of blockchain in the international shipping industry. This is truly an interesting topic, and many things have happened here in the recent years. In order to prepare you, the audience, you'll have to first deal with some basic information on the shipping industry itself. I'm convinced that everybody here today has by now a rough idea of what blockchain is and what functions the blockchain can fulfill. However, I'm not quite sure if everybody has an idea of the importance of the shipping industry and the core document we will talk about today, which is the Bill of Lading. Despite its considerable importance for world trade, shipping has remained a niche topic for lawyers, which is why I'm really excited to bring it a bit closer to you today. I will first give an introduction to the use of transport documents in international shipping. Then I will proceed to outline how blockchain has changed or might still change in future, the way how business is done. And lastly, I will present some remaining legal and practical issues which might still hinder progress in this area. Let's start with a brief example. Let us imagine that I forgot that emails existed for a moment and wanted to send a USB stick with my PowerPoint slides, which I'm using right now, from where I am right now in Hamburg to our great conference organizers in Barcelona. Being in Hamburg, I would simply go down to the port and hand over my USB stick to one of the many ship owners or shipping companies in the port. And I would instruct them to carry down my USB stick to the port of Barcelona and hand it over to ECAP, who would be very kind enough to collect my USB stick directly from the port. Since shipping is a very risky business and I cannot be certain that the shipping line will actually deliver my USB stick in Barcelona, I will only hand over it to my USB stick to the shipping company if the shipping company assures me that it will actually carry out my instructions. This is why the ship owner will give me this transport document, which we see on the left side of the screen, the Bill of Lading. The Bill of Lading, which I have just received, has 4 key functions. It is a receipt for the goods shipped on board. It is evidence for the conclusion of a transport contract. It can transfer the transport contract to a new holder of the Bill of Lading. And it is also, and most importantly, a document of title. I will go into the 4 different functions a bit deeper now. So, as I said, the bill of lading serves as a receipt. So it will have information on the goods that have been shipped on the vessel. In my case, it will say, for example, 1 USB stick weighing roughly 200 grams and shipped in apparent good order and condition. This is important in case the goods get lost on the way or damaged during the transit, since it provides evidence for claims against the shipping company. When I hand over my USB stick to the shipping company in Hamburg, we will also have concluded a transport contract, a contract for the carriage of goods. This contract will outline who is liable for damages to the cargo and what happens if something happens to the goods. So I have the right to claim compensation from the shipping company in case something goes wrong. So the bill of lading actually proves and provides evidence for the terms of the contract of carriage and for the fact that the contract was in fact concluded. The problem is that if I send my USB stick down to ICAP in Barcelona, it is not simply enough that I myself can claim compensation from the shipping company in case something goes wrong. The receiver itself must also be able to do so. So therefore, the bill of lading is capable of transferring the contract of carriage to any new holder of the bill of lading. So by actually holding the bill of lading in the port of discharge, ICAP would itself have a claim under the contract of carriage against the shipping line. The most important function, however, is that the bill of lading is a document of title. This means that holding the bill of lading has essentially the same effect as holding the goods. Due to this reason, I can actually sell the goods to another party by just handing over the bill of lading to the buyer while the goods are still somewhere out at sea. Of course, my USB stick example in this regard is not the best one since I won't sell it to another party. But imagine that instead of a USB stick, we are actually sending a cargo of oil or of coal. It might be necessary for me as a seller to actually sell the goods and receive my payment before the goods arrive at the destination many months from now. I can do so by simply transferring the bill of lading to any third party. The buyer can already pay me because he knows that he's entitled to the goods because he's the holder of the bill of lading. The buyer is also entitled to sell the goods himself to a third party, and then the chain can continue. Of course, the overview here was just largely simplified. In reality, transactions can get a lot more difficult and complex, as Anselm has already mentioned in the introduction. Usually, there are financing banks involved on each side who issue letters of credit in order to finance the whole transaction. The bill of lading that has been issued by the shipping company must then be transferred as an original, first to the bank of the individual that has sent the goods, and then to the bank of the buyer. The bank will in turn issue letters of credit and payment can be demanded under that of credit. In the end, the original bill of lading is arriving at with the receiver who can then produce the bill of lading, hand it over to the shipping company and receive the goods. I think everybody by now is quite aware that the whole process of sending the original bill of lading to all parties and banks along the transaction chain can take quite a long time. The documents must not only be sent across borders by conventional means, for example, by courier or by post. The banks also have to, of course, check and process the documents. So it might be very well the case that when the vessel arrives, the ship arrives at the port of discharge, the whole process could not be finalized before, and the ship with the goods reaches the port and there is no transport document available at the port of discharge. This causes actually a huge problem since the shipping company is not required or even allowed to deliver the goods without the availability of an original bill of lading. So if the shipping company delivers the goods without having seen an original bill of lading at the port of discharge, the shipping company can be held liable for all damages that occur due to a potential wrongful delivery. The law is thus perfectly clear: do not deliver without any original bill of lading. But since time is money and the shipping company cannot just wait until the documents arrive months after the arrival of the vessel, there has to be a practical solution. So in practice, actually, the carrier, the shipping company, is provided with a letter of indemnity whereby the receiver actually assures that he'll indemnify the carrier against all damages which might occur because of the delivery without original bills of lading. However, it is a problem by itself how these letters of indemnity are enforced, because first of all, they are not insured. Second of all, there might be issues with the enforceability, as the case may be. And thirdly, if the receiver who issues the letter of indemnity is actually insolvent, the shipping company has no collateral anymore because they have delivered the goods against the letter of indemnity. So that's not really a solution. If we have now that we come to some more interesting topics, I think, for you, if we have all these problems with the paper bills of lading, why didn't we just switch to an electronic form in the beginning? It would all make everything easier and faster, wouldn't it? But there are several issues which have to be taken into account here. First of all, it has to be made sure that the electronic bill of lading cannot be copied. Otherwise, the shipping company would face potentially multiple holders of electronic bills of lading at the port of discharge and could not determine to whom actually to deliver the cargo. Further, it is not really easy to produce an electronic bill of lading because it has to also be secure. It means the bill of lading can include some potentially confidential data of shipments, and it would not be appropriate to simply send bills of lading in PDF format via email. The first attempts to create working electronic bills of lading were made through so-called registry modules. These were closed, centralized platforms to which members of the shipping industry could subscribe to exchange documents. The platform provider would then, as a central trusted authority, make sure that the electronic bill of lading would not be copied. Through this, the centralized platform could at least make sure that the shipping company would not face several alleged receivers at the port of discharge. However, the shipping industry was not convinced, and none of the centralized registry models could attract a sufficient number of members in order to actually make any difference. This was mostly due to the fact that the platforms were closed in nature, and the shipping industry did not regard it as a reasonable investment to implement the required infrastructure if it could not be used entirely and universally, and only in a limited number of cases. Once a counterparty, as we can see on my slide, buyer C, is not subscribed to the centralized model, the parties have to revert back to paper. And this, in the beginning at least, happened quite often. Further, also, there might be some general mistrust against the central authority on which the entire platform depended. And also, it was not regarded as appropriate to actually store all the information in a single point where it could be easily hacked or any harm could be done to it. This is why a few years back, when Maersk and IBM announced that they would create a platform based on blockchain technology, the shipping industry got quite excited. The plan was to use the characteristics of blockchain technology to overcome the issues of the past. Blockchain made it possible that the individual who's entitled to the bill of lading records on the blockchain could be identified without a centralized party. Further, the decentralized nature of blockchain seemed to be the ideal environment in order to actually achieve a critical mass of participants to change the old practice of paper documents. The idea was essentially that after a contract of carriage is concluded, the ship owner could enter all the data which is necessary for the issuance of the bill of lading onto the blockchain and issue a tokenized bill of lading. This token bill of lading could then be transferred to the seller of the goods, who could in turn transfer it to the buyer of the goods. The buyer would then almost instantly receive the tokenized bill of lading and could, once the ship arrives in the port of its destination, authenticate himself to the shipping company, the carrier, and receive the goods. This practice would make it much easier to transfer a tokenized bill of lading along a lengthy chain of buyers and sellers, including their respective banks. Waiting times at the port of discharge would always be old rules. However, there were still some problems to deal with. The first issue in this regard was insurability. As shipping is a risky business, as mentioned before, a shipping company must be insured against third-party liability. This is done through so-called P&I clubs who offer protection and indemnity, hence P&I, insurance to shipping companies. In the beginning, these P&I clubs were not willing to insure the risks associated with electronic or blockchain bills of lading. This meant that for using electronic bills of lading, the parties had to fear the risks of personal liability. This has, however, changed over time. P&I clubs are now covering the risks of electronic bills of lading, provided that the used platform has previously been approved by the P&I clubs. Well, only a few models were actually approved a few years back. Over the last 2 years, many more providers joined the list of approved models. You can see a list of approved models here on my screen. New models are only then approved if the P&I clubs had the opportunity to actually check the technical characteristics of the platform and the terms and conditions beforehand that cover any transaction on the platform. You can also see that the P&I clubs have now, in addition to the conventional centralized models, which I've mentioned before, have approved several blockchain-based solutions for bills of lading. For example, eDocs, the Wave Bill of Lading, TradeLens, and CargoX. From these new approved models based on blockchain, I wanted to take the time to take a short look at 2 different models. The first model I wanted to spend some time on is the solution of Maersk and IBM, which I have mentioned before. It is called TradeLens and uses a permissioned blockchain infrastructure, which is based on Hyperledger Fabric. Thus, it ensures that only the parties to the transaction can actually access the shipping information, the data which is entered onto the blockchain. The legal relationship of the parties using TradeLens is governed by a rule book, essentially terms and conditions which all parties have to agree to before using the platform. The fact that TradeLens uses a permissioned blockchain, of course, means that, like in the older days, a subscription is required in order to use the system. The second model I wanted to quickly look into is eDocs Online. Unlike TradeLens, eDocs Online makes use of the public Ethereum blockchain in order to store proof, like hashed proof, of the bill of lading on the blockchain. However, in order to issue bill of lading via eDocs and store the encrypted proof of the document on the blockchain, a subscription to eDocs is required once again. So again, the relationship between the parties is covered by terms and conditions which the parties have to agree to before signing up to eDocs and issuing any document. We could see also from the slides before that a common feature of the nowadays used models, either based on blockchain or not based on blockchain, is that they are essentially only open for subscribers. Furthermore, the relationships between the parties are always governed by a multi-party contract, the terms and conditions as mentioned before. It is necessary to agree to these terms and conditions beforehand because these conditions are vital to replicate the functions of the bill of lading, which we have discussed in the beginning. Essentially, in order to transfer the contract of carriage to a new holder of the bill of lading, a new contract must be concluded in order to replicate the transferability function of a real paper bill of lading. This is called novation of the contract. So the shipping company must agree in advance to actually be bound by a new contract with the receiver or the holder of a blockchain token with a bill of lading. The transfer of title is achieved by an advance agreement through the terms and conditions as well. So the shipping company will agree that it will always hold the goods in favor of the party that is currently entitled to the blockchain bill of lading. Through this, the holder of the blockchain bill of lading can dispose over the goods and trade them as he wishes and also sell them to any buyer he wants. Further, it is also necessary for all the parties to waive any objection for the future that the use of an electronic version of a bill of lading would be deemed to be invalid in the eyes of the law, because as we will see afterwards, the legal rules covering the bills of lading on the blockchain are still not really available and difficult to construe. Already from these core terms of the respective rule books, we can see that the functions of an original bill of lading cannot be replicated without actually having this rule book, the terms and conditions. Having said that, the issue that a prior subscription to one of the now many platforms for blockchain bills of lading is required is still very real. The old problem of registry models still exists to some extent. Despite this, platforms such as TradeLands have achieved significant results in the past. We can see from the screenshot that I took yesterday evening just how many transactions TradeLands has recorded on the platform. But the question remains if that will be enough to achieve a critical mass. So to some extent, it is the case because TradeLands and some other blockchain platforms had significant support from the biggest container lines in the world, including Maersk, MSC, and CMA CGM. So for these big container lines, which we see in the ports quite often, paper bills of lading will be much more rare in the future. But the problem remains for smaller shipping companies and other participants of the industry, because those stakeholders cannot rely on the same infrastructure as the big container lines can. So the problem of the past are still very much real because no platform has achieved a critical mass of participants of the shipping industry and is not universally accepted, at least not yet. So the question remains if a fully open blockchain-based solution for electronic bills of lading could be implemented in the future. Despite the technical difficulties that might be brought with it, especially with permissionless blockchains, there would also be tremendous legal issues to overcome, since an open platform could not rely on the terms and conditions that have been vital to replicate the functions of the original bill of lading. Without a legal framework, a fully open system can thus not be built. If we speak about such a legal framework in terms of the international shipping industry, this must for sure be an international legal solution, because shipping transactions are never bound to a domestic transaction, and they always cross the border. So international shipping law is largely defined by international conventions applicable to the area. These conventions are concluded between state parties, but also define the relationships between the different stakeholders of the industry. So between the ship owner and the sender of goods, for example. None of these international conventions dealt with electronic transport records. In 2009, there was, however, an initiative to pass a new international convention for carriage of goods by sea, the so-called Rotterdam Rules, because they were, of course, negotiated in Rotterdam. As we can see from this slide, the Rotterdam Rules, in fact, covered electronic transport records and therefore electronic bills of lading. However, the Rotterdam Rules were not widely accepted and thus never really entered into legal force. The approach of the Rotterdam Rules is still quite interesting because it established a technology-neutral test for the admissibility of electronic bills of lading. Under the Rotterdam Rules, electronic bills of lading would be accepted if they are the functional equivalent of a paper bill of lading. Despite the failure of the Rotterdam Rules to find enough ratifying states to enter into legal force, the functional equivalent approach has actually found the way into many national legislations. One example of such a jurisdiction where we have a functional equivalent approach for transport documents is Germany. So actually, if in Germany, a blockchain bill of lading would replicate the same functions as an original bill of lading, it would be admissible under German law. So provided that a blockchain bill of lading would in fact be the functional equivalent of a paper bill of lading, which has to be assessed with regards to the functions of the bill of lading, but also regarding the legal environment of such a record, because it doesn't only have to replicate the functions of the original bill of lading, but also has to be compliant to all regulations which are applicable to the respective transaction. So this means, for example, that the issuance of such a transport document could not violate or should not violate data protection rules or things the like. So, of course, it might still take a long time until sufficient national legislators recognize the functional equivalent approach or an international convention on this topic is ratified by sufficient state parties. But as of now, there are many developments in this regard, so we can be actually quite expecting of something in the future. For example, the UNCITRAL model law on electronic transferable records provides for a template regarding the functional equivalent approach, which domestic legislators may use in order to establish national rules on functional equivalency. The future blockchain-based bill of lading, therefore, looks quite promising. So we have to see how actually domestic legislators take over the model law on transferable records. But if that happens, we actually have a promising chance to see more blockchain bills of lading in the future. It is also of utmost importance that actually English law issues some rules on electronic bills of lading, because for historical reasons, English law is the most important legal system for shipping transactions, and many transport contracts are actually governed by English law. So it will be very important that in this area we make some progress. As of today, as mentioned, we still require multi-party terms and conditions in order to replicate the functions of an original bill of lading. So the transferability function and the document of title function can not be achieved without having a closed registry model and actually terms and conditions governing the entire transaction. A fully open model, which might be desirable to actually have a critical mass of participants on the platform, could not be made possible without a full legal reform. So from my perspective, it remains to be seen if blockchain can actually solve the decade-long struggle for electronic transport documents of the shipping industry, at least in future. So as I mentioned, for the containerized trade, for the big container lines, blockchain has already achieved a significant modernization of transport of containers. So the future will show if this success can be extended to the other parts of the shipping industry, including, for example, oil tankers and bulk trades in coal, for example. So it is still not quite certain how we will see the whole area in a few years, but I think it all remains quite promising. Thank you for your attention. And if you have any questions, I'll be happy to answer them. Thank you.
Thank you indeed, Christian, for this very good and very thorough overview about an area of law in which most of us perhaps do not have much practical experience, even if I have to say that my dissertation, my thesis was on international air freight. So, and I moved away from that since then. But it's quite interesting, and notably the two last citations you had on your last slide gave me some additional thought, because my impression was that we don't really need any legislation in this area. Actually, it is a typical example of international commerce, of international soft law in commerce, where the industry simply did not wait for legislation, but has found its own technical and contract-based solution. And if it's not used by all participants, I think that's not a bad sign as such. We don't have to force everyone to use a blockchain bill of lading. If there are small shippers who still want to stay with paper, that's fine. But if the big lines who are really doing the bulk of international shipping, if they are switching to that system, I think there may be already a lot achieved.
That's of course true. So from my perspective, it's also quite an achievement that now we have the big container shipping lines in these platforms, and actually a huge percentage of bills of lading from these big container lines is issued on the blockchain. So I agree with you that it is quite an achievement. However, I think if we want to extend that for the whole shipping industry, there has to still be some progress. Otherwise, it will all be covered by terms and conditions, and we don't know who is dictating these terms and conditions. So it might be not really feasible for smaller participants to actually subscribe to these platforms. And if we take into consideration that not only the big shipping lines, of course, have to be a member of the platform, but also the senders, the buyers, smaller parties who are actually buying goods. You mentioned before before in your introduction that one container can contain several parcels which might be destined for different buyers. So this small buyer might not be willing to actually accept the terms and conditions that have been prescribed by the shipping lines or the provider of the ledger for the platform. So I agree with you that it's a huge benefit which we have right now. However, I think in order to achieve a benefit for everybody in the industry, there has to still be some progress. Otherwise, it will still be all based on soft law, and it might change over time.
Yeah. Okay, well, as I don't see any specific question just now regarding the specific topic of the bills of lading, I think we should move on to our next topic, which is perhaps even more intriguing because I think that nobody who hasn't been in the blockchain trade in the past in real estate cannot really imagine how you can use the blockchain in connection with real estate transactions. Alexander, I'm passing on the floor to you, and I'm most interested to hear what you have to say.
Thank you very much. Just share my screen. Yes. So first of all, again, thank you for having me today. It's a pleasure to be able to speak and present what we are doing and how we see the industry. So as you said, I'll talk about real estate security tokenization in general, but then what's the use case in the real estate industry. Before I go into detail, shortly introduce myself again. You already did it, wasn't expecting that kind of introduction. I'm Alex, I'm co-founder of Black Manta Capital Partners. I'm a lawyer by education and by profession, was working in law firms in Vienna and New York, in capital markets and corporate finance departments. Made a move into the venture capital industry in the year of 2013. Set up 2 venture funds focused on industry agnostic deep tech solutions. This was the time when I also got in touch with blockchain technology. These 2 funds are still up and running. I'm not involved anymore. And 3 years ago, I founded Black Manta Capital Partners with the aim of corporate finance on blockchain. So using blockchain technology for new forms of financial instruments. So what we do with Black Manta, we are a tokenization as a service company. As you said at the beginning, we have a full service approach. So we take our clients in a very early stage, we advise them, or we structure together with them potential issuances. Therefore, we have a Vienna-based advisory. We provide the whole technical infrastructure for tokenization projects. It starts with the investment platform, with KYC, AML, but then also the blockchain infrastructure together with partners, so smart contract programming, etc. This is done by our company in Cork as a tech development hub. And our most important company is in Munich, Germany. I'm myself from Austria, by the way. In Munich, we have our BaFin licensed financial service institute. It's more or less a broker dealer in order to run this multi-SDO platform, notified in all 27 European member states. We also have partners in the US, in Middle East, and in some Asian countries in order to be able to place financial instruments also in other parts of the world. Yeah, that's in a nutshell what we do. Before I go into real estate tokenization or use cases, I'd like to zoom out a bit and a bit the historical dimension. So we're talking today about securities, financial instruments. So hundreds of years ago, the first securities were issued on paper, and this stayed for a couple of hundreds of years. Then we had the first, I'd say, industrial innovation. It was when IBM computing came up in the 60s. Then it was able to mirror these securities and financial instruments in a digital or electronic form. Then 30 years ago, when internet was invented, it became able to to trade these securities on a global level 24/7, at least, or when the stock markets are open. Now, 30 years later, we have with blockchain technology another innovation which enables us to do even more stuff in a digital way, providing liquidity in illiquid markets, to have faster settlements, to be able to do self-listings of companies, going public in a very easy form. All these opportunities and solutions are provided by the blockchain. We are still not there yet, so we are in a very early phase of this whole, let's call it trend. I think it's more than a trend. The European Commission states it's a trend. We're in a very early stage, but we are growing very fast. Just looking at the numbers, there was a new study today in the morning, some STO numbers. As I said, I just put them together today. It says that total funding raised with STOs was 1.5 billion. Doesn't sound that much when looking at the financial market. However, this is funding raised and not assets tokenized. We have a lot of STOs where we tokenize assets, real estate, but they are not sold, they are not used for fundraising purposes. So this is only funding raised. They say there are global STOs 367. Yeah, interesting that all, or 85% almost, were issued on the Ethereum blockchain. So we have a clear market leader here. We, for example, we are blockchain agnostic, so we are able to issue securities on different blockchain standards. It can be Ethereum, it can be EOS, it can be Stellar, it can be Algorand. We didn't focus on one blockchain. And funding success, 59%. This was quite interesting for me. I didn't expect it that high. Yeah. So we see there is clearly a market. There's clearly things are happening. This is not focused on real estate, these numbers. This is, I think, the total security token offering numbers. So from a legal perspective, so today was another conference in Vienna, and there was one panel. It was called Tokenization of Everything. And it is more like you can tokenize everything. We only focus on 5 asset classes. Real estate is the one we have the most projects in, but also corporate finance. We tokenize venture funds or private equity funds, tokenization of commodities, and then also tokenization of startups is also very, yeah, we also do that. When it comes to types of security tokens, there are 2 main types. It's debt token or equity token, but it can be also kind of a mixture, a mezzanine structure. So we are not limited in the structure. So lawyers can be, if they want to, very creative in the structuring of these financial instruments. Therefore, it's important to understand that the token is only the transport medium of rights and assets attached. And that's probably the big difference when we then hear about digital or cryptocurrencies. There is no need to implement new laws for security tokens because we already have existing capital market laws and we just apply them. There's some things we probably slightly need to change, but overall, we were able from day one to issue security tokens in a compliant way. Having this said, regulatory is key in this industry. So 3 years ago, it was all about tech, and tech was the big, the challenge, how to do it. As of today, and when talking to issuers, it's all about regulatory. It's about which jurisdictions am I issue the tokens in, what investors do I target, MiFID II, So that's why we also have a very strong regulatory focus in-house. Now coming to real estate investments. So there are many blockchain use cases for real estate in general. I'd like to focus on the financing part of real estate, or the funding part, or the selling part. and on these financial instruments we create. So what are the opportunities to invest in real estate? I can either buy a flat or a house or commercial real estate, so direct investment. I can purchase listed shares in a real estate fund on the stock market, or the third thing probably is a crowdfunding platform, whereas I'm not really invested in real estate. I'm just giving a subordinated loan to a real estate company. But in general, these are the three opportunities to invest in real estate at the moment. What are the general challenges? You have normally a high entry threshold. It's capital intense, so not everyone can afford to buy a flat. Cross-border transactions are, for normal people, for the average people, too complicated. No one will buy a flat in another country. We have a slow and complicated process of ownership transfer. We have a lack of price transparency, and we have high transaction costs. So the solution is tokenization. It's not the solution of everything, but some of these challenges we can surely address. And I'd like to give you two examples of actual deals, actual real estate deals we have made, so you can get a better feeling what I'm talking about. The first is Tigris. This was actually our first STO 2 years ago. It was a Berlin real estate, residential real estate. It's currently under construction, so it was a development project. It was back then the first cross-border retail STO in the European Union. Investors were able to invest with only 500 euros. And the structure behind this was, we had this rather small project, actually 11 million. It was already fully financed, 80% by the bank as debt, 20% by the development company. We took 2 million of this equity portion out and tokenized it. So the developer, he could limit or lower his equity risk in this whole project, because the rest was financed by the bank. On the other way, investors could invest with only 500 euros in this project, putting themselves in the developer seat. And once the construction is finished, participate in the value increase of the property. And then in this project, is it expected to, after the construction is finished, to sell the apartments. Investors get a 20% profit share. And interesting was also that investors with at least 25K investment volume had a preemption right on the apartments. Even though it was for retail investors, 99% of the token were purchased by an institutional or professional investor. So we had some retail investors here, but it was after a few weeks, it was sold. So this was a good example of the advantages for both sides. For the investor, who can get into an asset class, into an investment class he had no access until then. And also for the developer, who could limit his equity risk in the project and start another project or do a bigger project. So this is a good example, in my opinion, for equity-based tokenization. These tokens are tradable, so you can also, you're not stuck 3 to 5 years in this project. You can sell them peer-to-peer or on our investment platform to other investors interested. They are not listed anywhere. There's no exchange for that. This is secondary market is another topic. Probably can be another panel on secondary markets. Won't address it now. But in theory, I call it, you have a secondary market. You can sell these tokens again. Another project is a debt project, which is currently actually just went live 3 weeks ago. This is a digital bond issued on the blockchain. It's a 50 million offering, 50 million British pound offering from a Luxembourg securitization vehicle. which is mirrored, so the transaction and everything is mirrored on the blockchain. And yeah, it's actually, from the legal structuring, it's pretty straightforward. It's a classical corporate bond, just settlement. So transaction settlement and everything else will be handled through blockchain technology. Yeah, so you see, you can either have equity deals, debt deals, mezzanine deals. You're completely free in structuring, as long as it makes sense for investors and the issuer. So to give you a bit of perspective, so how the process works, and the good thing is it's very straightforward. It's not very complicated. It's like in every other financing deal you may have made in the past. So we have a financial structuring at the beginning, based on that, based on jurisdictions, based on investors targeted, based on the volume. We work together with law firms and do the legal drafting. Probably we need the capital market prospectus, or we also have, for example, now we deal with the SEC in the States. So all these things are done based on the financial structuring of the deal. Then we come in, we deploy tokens on the blockchain, we do the smart contract programming. Then we determine and implement the placement strategy. And in the end, they are issued either on our portal, or we also have white label solutions, for example, or on any other platform. So probably this is also interesting to mention. So we don't have a product which must fit all. And we also have deals where we are not the tech provider, for example, where the issuer comes with tech from Securitize or Tokenio or any other platform, and we are just a placement agent. So we have we have a pragmatic approach. No one needs to do everything with us. But so these are the steps. They are sometimes overlapping, but from an issuer perspective, it's pretty straightforward. It's nothing new. That's what I want to say. It's nothing new. Blockchain is just the technology layer underneath. Similar for the investor. And this applies not only to us, this applies, I guess, to 99% of the platforms. You register, you do your KYC, we do the AML checks, you provide the wallet address you want the tokens have in, you select the investment project, you transfer the money or the cryptocurrencies, whatever is accepted, and then you get your tokens into your wallet. Beauty is you have a security then directly in your wallet. It can be your phone or any other device. There is no need for an intermediary anymore. So it's not like if you purchase stocks through your bank, you have a depot bank in the back. It's not possible for you to sell the stocks directly to your colleague. With security tokens, it's easy. I could sell to Christian, Hans, I could sell them in a few seconds today. Yeah. So again, straightforward, pretty easy process, nothing really new. And our goal is, when talking to investors, talking to issuers, they shouldn't even, so there's no need that blockchain is all over. So actually, when we talk to issuers, for example, we say, okay, there is a blockchain part, but you don't bother with that. It's just a background transaction settlement. Nothing you need. You don't need to be an expert in blockchain. You don't need to be. They don't have any tech experience. It's just, transaction settlement process. Regulatory, on the other way, is the more harder part. That's why we need law firms, and so I think this is, in a nutshell, what we do, what security tokenization is about. There are many, many, many other blockchain use cases in the real estate industry. However, we focus on capital market solutions, which is clearly big enough. And so thank you very much. If you have any questions, I'm here, or you can write me an email or visit our website. Thank you.
Thank you very much, Alexander. This is very interesting, and clearly it still raises questions. because I fully understand that there is not much of an issue with the blockchain if we simply turn a capital market, a corporate bond, into a securitized token. But my understanding is that most investors, when it comes to real estate, really want to have not only a token, but they want to lay their hands on the real estate itself. They want to be sure that under the applicable legislation, if something goes wrong, that they will have the ownership of the property. And that is something which I'm still not seeing how you can assure that.
Yeah, I totally get that. But this is something blockchain won't, or blockchain can't solve at the moment, because it's simply not possible to register, or in most countries, to register a token in the land registry. So what we do, there's normally an SPV as owner, and we have participation rights of this SPV tokenized. So this is a workaround. It's not the best way, but as of now, it's not possible to register in a land registry.
Okay. In your first example, this the financing in Berlin, Tigris S17A, you said that the buyers had a preemption right. Was that simply a contractual right, or
yeah, no, it was
so
just,
they didn't have they weren't registered as a okay.
It was a contractual right. Yes.
Mm-hmm.
Could
okay.
Yeah, I mean, the beauty is, so I understand if you invest 200K and you buy a flat, you want to be in the registry. But if you invest 500 or 1,000 euros, you probably don't care if you're registered or just have a right against the company. The beauty of this is fractional ownership. You can say, okay, I cannot afford the whole flat, but I can afford 3 square meters and participate in the revenue generated by the rent. So
yeah, absolutely agree. I think when it comes down to a mere financing, it's like I buy some shares in an investment fund, in a real estate investment fund. So that would be perhaps the same mindset.
Yeah, similar, but you can put together your own portfolio, you know?
Yeah.
And you can drive by the building 2 times a day when going to work and say, hey, I own here a few square meters. Yeah.
One other thing which came to my mind, being from Germany, clearly we are set on with that mindset of a land registry. But having bought a flat in France, I realized that France doesn't have a land registry, which means that the contract, the notary contract in itself is the land registry for this individual flat, which means that you have a list of owners coming down from the French Revolution until today in this contract. And the issue is that you need about 2 years to receive this document, which means that in the meantime, I foresee that it's extremely difficult to really use this flat for taking up a bank credit, reselling it. It's simply that if you haven't got the document, you cannot prove anything. So perhaps in these countries like France, it may be a possibility to further use blockchain as a means to speed up this process of actual transfer of property.
So as I said at the beginning, we are in a very early stage. So there are probably a lot of use cases we don't even think about today. And that's why we decided also to be blockchain agnostic from a company structure, because probably in 2 years, we have something much more bigger and better than blockchain. You know, technology at the moment moves so fast. We're looking into DeFi, we have projects on a daily basis. You cannot track anymore if it's not your full-time job. So there's so much speed in the market. Yeah, I think we will see in the next years a lot of interesting use cases and new solutions. But
Very interesting. I'll park that for our final discussion at the end, because I have already seen one question which is sort of asking what to expect in the upcoming years. There is one question which is perhaps directed to your session just now. Are you looking at integrating AI and automated decision making so that high volume trading could start to occur within the market, which then would be run by machines, notably in these cases of sort of crowdfunding of big real estates where everybody's investing only €500? Clearly, that is something, if you would handle that by hand, that would not be really efficient.
Yeah, so no, we haven't looked into that. It's an interesting approach. We are a primary market provider. So I think for secondary markets, this is clearly something of interest. I guess also Hans can tell a bit more about trading and automated decision making. Yeah.
Mm-hmm. Okay, well, that is perhaps a good statement to move over to Hans and get the latest on cryptocurrencies. And I think that as everybody now knows about Ethereum and sort of the big ones, I would be most interested to hear what the latest news from that area of blockchain applications is. Hans, the floor is yours.
Thank you very much, Anselm, for that introduction, and also thank you to my fellow speakers for coming up with great presentations and breaking the field for me. So I'll take over the baton and I guess cross us all over the finish line in the next half hour. Today we're going to speak about blockchain more from the crypto and from the digital currency perspective. One thing I do have to correct you in, Anselm. I'm not from University of Amsterdam. I am from the Free University of Amsterdam. I know I can be a stickler for it, but I'm pretty sure that my professor would not appreciate not being mentioned. I'm doing my PhD at the moment at the Faculty of Law at the Vrije University of Amsterdam, not the University of Amsterdam. I just wanted to correct that. So first of all, what are we going to do today? I think it's best if we start a little bit by discussing what digital currencies actually are. There are a lot of words going around, there's a lot of confusion, and there's also some ambiguity in it. So let's first discuss what actually are digital currencies. Then we zoom in a bit further on the actual cryptocurrency and explain its uses and its applications. Then we have a look at what trends and developments we see in the market and what kind of impact it actually has on the landscape as we see today. What kind of risks do we see? What kind of potential does it have? And where do we stand now? And that sort of wraps up a bit of a high-level overview of the digital currencies. And the first thing I actually came across to is, you know, if you really want to kill some time, there's some really funny videos on YouTube, people trying to explain what Bitcoin is. And the funny thing is, those are people who have actually been in the blockchain and the Bitcoin industry for many, many, many years. And they simply cannot explain what Bitcoin of blockchain is. And I always find it extremely hilarious and funny. So I hope I'm not going to put you to sleep today, but actually I hope you'll be sitting on the tip of your chairs today while we discuss something really exciting, namely digital currencies. So what are digital currencies? Are digital currencies and cryptocurrencies, are they the same? Are they words we can use interchangeable? Is a digital currency a cryptocurrency? Is a cryptocurrency a digital currency? Or isn't it? Well, as so often, this is not really easy to answer. And from a legal point of view, if you look at jurisdictions like America or Europe or Asia or Africa, each country or each block of countries have different definitions of what cryptocurrencies and digital currencies are. And actually, it makes it even worse that even within certain jurisdictions, different agencies and different institutions hold different definitions. A tax office, a regulator, a government, a bank regulator, they all have different interpretation, different meanings, and different interests in what digital currencies and cryptocurrencies are. So that makes it indeed quite an interesting topic and quite important to have a further look at. And I've just written down a few of the agencies we actually have in Europe and in America, who all have different definitions, sometimes slightly different, sometimes significantly different to what crypto and digital currencies are. And in America, for instance, it's actually quite funny that individual states can actually hold different interpretations. So in America, I think there are, with all the states themselves, probably 50, if not 100 different definitions held to what digital currencies are. So that makes it indeed a bit of a murky backyard. For now, I think it's best and easiest to use the word digital currencies as a meta term, as an umbrella term for all things that are electronically used to convey or to relay value or an asset. We call that digital currency. So from now on, we use that as the meta term. And digital currencies is in that sense defined, not necessarily by me, but that sort of seems to be a bit of a consensus definition, as any currency or money-like asset that is primarily managed, stored, and exchanged on a digital computer system, usually the internet. And they're also called digital money, electronic money, or electronic currency. And in that umbrella, we more or less see three flavors. These are the cryptocurrencies, the virtual currencies, and the CBDCs, the central bank digital currencies. Again, digital currency is in that sense the umbrella, the meta term we're going to use during this presentation. So first of all, what are cryptocurrencies? Well, there are lots of ways to describe what the cryptocurrencies is, but I'm merely now going to describe some of the characteristics that actually sets it apart from a central bank digital currency, from a cryptocurrency, from a virtual currency. The cryptocurrency is hardly used or accepted as a legal tender. It's issued by projects and it's not issued by governments. It is a transparent, held on a distributed, transparent ledger, so people can actually access transactions and can view the history of transactions that occurred for that specific cryptocurrency. Most of the cryptocurrencies, and especially the decentralized cryptocurrencies, are aimed to ensuring digital freedom, financial independence. And if you look at the value of the cryptocurrencies, they're at the moment still relatively highly volatile. They can go up and they can go extremely down. Sometimes that can happen in a matter of hours or days. Also, since it is not accepted as a legal tender, there is also hardly to no interbanking interoperability. And that is actually quite an important component of a financial instrument, of a currency. Also, cryptocurrencies are blockchain based. So that means they are cryptographically protected using digital signatures, but more importantly, also work peer-to-peer. You and I directly can interact, can engage and swap currencies, money or value. And if you had to give a name or a label to this, this would be the decentralized society. That's probably the best way to describe the cryptocurrency community, the encrypted digital currency. Secondly, we see the virtual currencies. And virtual currencies are actually not new. They existed already in the 1950s and probably even before that, in the way of coupons, or if you get certain stamps, so you could redeem them for a certain price or something. So virtual currencies are definitely not new. They are unregulated, currently digital representation of value, and value can come in different shapes and in different forms. And also here they're issued and controlled by developer, by a team of developers, so not a central and regulated body. It's just a team of developers who said, well, this is a unit of value, and this is what we attribute to value thereof. And they're more or less accepted specifically in a community, and it can be a gaming community, for instance, that you can use tokens to access a specific game or go to a higher level or get rewards. So they're used only or exclusively in a specific community. So they're therefore also not supported by institutions. And they're also not necessarily attached to fiat, and fiat currency is the money we use, the euro, the dollar, that is what we call fiat currency. They're not necessarily attached to it. And you've got three ways they can actually appear. It can be closed, convertible, or one directional. Well, as it says, the closed one is simply, there's no connection to a real economy. So for that gaming example, for instance, they do not represent any value other than in that specific game, they have a certain value to that specific gamer, but there's no real economy component value thereof. Secondly, they can be convertible, so you can exchange them to fiat, to money, or vice versa. And an example of that is air miles. So if you're a frequent flyer, you can actually use your points to get either cash, or you can put in cash so you get more miles, so you can buy that extra set of miles so you can get that free ticket. It can also, they can also be used one directional. So that's more of the coupons and the loyalty program components. And if you had to give a name to this one, I would say this is the loyalty society. And then the third one is the central bank digital currencies. And they are an electric form of the money you and I have in our wallets. And they're issued by governments and are also supported by the financial institutions. So if you look at China, for instance, with the digital yuan, or the European Central Bank, which is now seriously considering and issuing the digital euro, they are supported by they will be supported by the Central Bank of China. They will be supported by the Central European Bank, and they're more or less issued to ensure financial stability. Obviously, that is a digital currency that is interoperable, that goes from one bank to the other, and you can use it blending in cross-country and also cross borders. So that also means that you can take away part of that volatility. And this will be the cashless society. If the digital euro, for instance, will be issued in Europe, then there's more or less no more need, if all the points of sales are being converted into cashless points, to actually have a wallet with you. You would have a tap and go either via your phone or another device, or your smartwatch. So that will be the cashless society. Today, we still use those terms a bit interchangeably, although the bigger focus in this conversation rely on cryptocurrency. And obviously, the Bitcoin is one of the big and the famous ones. So where do we stand today in the cryptocurrency the landscape? Well, the cryptocurrencies got obviously introduced by the now famous white paper of Satoshi Nakamoto, in which he offered a solution for peer-to-peer cashless society, which became the Bitcoin. That was in 2009, so the Bitcoin itself is now 12 years old. But the Bitcoin itself is no longer alone. Today we have 6,500 cryptocurrencies. Well, obviously there are a lot more than you and I could possibly list off. Most of the coins have absolutely no value, have absolutely no trading history, have absolutely no uses whatsoever. But the bigger coins absolutely do have, and they keep on growing because a lot of the projects get funded by cryptocurrencies. So they issue their own coin and they add to the spectrum of the cryptocurrencies. As of today, and this was off, I think, 2 o'clock this afternoon, the total market capitalization of the cryptocurrencies is slightly under $2 trillion. And that's an enormous sum of money. I do agree with that. But if you look at it into perspective of all the cash that is floating around in the world, it's, you know, it's not even 5%. So in that sense, it's actually still not that much. And if you actually look at in perspective of all the assets we have globally, and I actually had to look it up, and we have $1.3 quadrillion worth of assets globally. And to me, that is a number I can't comprehend. I know it's a one with 15 zeros. So if you look at, you know, at the moment we've got 7.8 billion people, 1.3 quadrillion dollar worth of assets. So that's roughly $150,000 worth of assets globally per person in the world. So compared to that, 0.14% is actually expressed in crypto. So crypto is still not that much of a component. And if you look at the cash and the money supply, it's becoming 5%. So that actually is becoming more or less a significant addition to the spectrum. But if we totally look at the market capitalization, we can still see that Bitcoin, well, you know, we're all Bitcoin's bitch in that sense. Bitcoin still hovers around the 50% dominance in the market, with Ethereum around the 20%. And then you got the rest of the other coins. The rest of the 6,500 make up of the other 20 or 30%. So Bitcoin and Ethereum are still the main and dominant coins, and you could call them more or less the euro and the dollar of the digital currencies in that sense. So what do we actually use a cryptocurrency? What do they do? Well, they have 6 specific uses. First of all, it's a medium. It facilitates a transaction, or it exchanges digital information. Blockchain itself, or tokens, can be used actually not only to relay value, but it can also be used to exchange digital information, because a transaction, after all, is a storage of digital information. They can also be used for raising funds, and the ICO, the STO, the IGO, the IEO, all ways of different ways of raising funds for startups is still very popular and still very fast. And in a matter of minutes, days, of hours, you can raise a couple of million and your venture is more or less on its way. It can also be used as a payment, used to procure a product or a service. And in the settlement, it's becoming also an interesting value-added use. Namely, there's an immediate application for it. There's no need for an escrow, and you obviously also don't need a third party. And another use for the crypto actually lies in its properties, because it has fast execution and it has low transaction fees, and it's cross-border, so it becomes really interesting. So let's say if I want to transfer $100 to, say, Singapore, it probably takes 2-3 days to transfer that money, and I probably end up paying 20, if not 30 euros in transaction fees. If I do that via cryptocurrency, it's more or less an instantaneous transaction depending on the blockchain or the coin you use, and it will be a fraction of the costs you use for the bank. But also some people use it for asset diversification. And some people claim that we're going through the big reset at the moment. Well, I'm not giving fuel or credit to that theory, but asset diversification is definitely something we use, and it's also something the big corporate institutions and the banks are actually now considering adding Bitcoin to their portfolio. Apple and Amazon, for instance, but also Tesla, Morgan Stanley, and also big banks have been doing so. We have 3 types of crypto, and then actually we go into the more interesting part of it. Cryptos can be a utility, it can be a security, or it can be an NFT. Well, the utility, as the word says, you can do something with it. It's to facilitate the transaction, to acquire a service or a product, and it's not seen as an investment. A security, however, is a token that represents an investable asset, and that can be ascertained by the Howey test, which I will explain later on. And this is a highly strictly regulated environment. And lastly, we got the NFTs and the non-fungible tokens, and they became really popular at last by the fact that they represent something unique. The first tweet of Jack Dorsey, the CEO of Twitter, for instance, was converted into an NFT and sold for like $1 million. Go figure. But it creates a verifiable digital scarcity, and it establishes digital ownership. And especially in the gaming and the art, it's becoming, and in the collectible industries and in the music, it's becoming an interesting phenomenon, and we'll see actually a lot of uses for it, especially if you combine it to, for instance, the metaverse. I think NFTs and the metaverse will definitely be a big trend and development for years to come. One thing I just said about the security. So what makes a cryptocurrency a security? And funny enough, although crypto is something of this century, the Howey test was actually established in the 30s and 40s by the Supreme Court in the United States of America. Someone bought some swamp land in Florida, and that land was being developed and later on converted into citrus farming. And the person who actually held that land made a lot of money on it because it got converted into citrus fields and it became all of a sudden valuable. Then the tax office said, well, actually you bought it for this, and now all of a sudden it has a value of, you bought it for X, it has a value for Y. I think you should pay capital gains over that. The person refused, went to courts, and the Howey company actually ended up in front of the Supreme Court. And the Supreme Court said, well, if there's an asset that you have no specific knowledge of, you have no skill set, you don't have the tools or the resources or the equipment to convert it into something of value, in this case, cultivating citrus trees, then it becomes an investment, therefore you become a speculator. So the buyers were ultimately converted into speculators because they gained on the value without having done anything for it. So if I buy shares in a company, for instance, a public traded company, if I buy shares of Amazon or Google, I have absolutely no influence what Google or Amazon does. If it makes money, I am therefore invested in an asset, so in a security. So what kind of trends and developments do we see along the road? Well, the future shaping trends to me are that we definitely are in the era of the global transformation into increased digitization. The digital transformation is definitely going further and further. And if the COVID crisis saw us everything, all of a sudden, we're not going to Barcelona anymore, but we're all sitting in our rooms via our screens. And that's actually an example of the increased digitization. Whether we like it or not, increased digitization is here to stay. And the central bank digital currencies. I know the European Central Bank is probably not the fastest acting, nor is the Federal Reserve in America. Central banks are not known really for fast fast acting, but central bank digital currencies will come. It's not a question of if, it's a question of when. And European Central Bank is actually actively looking into it even as we speak. And we also see institutional adaptation of crypto. Morgan Stanley, for instance, has recently added more Bitcoin to its reserve. That also means that regulation at some point in time will become more pronounced. And it will also be a coordinated response of regulators globally. And also the NFTs, tokenizing the world, especially in combination with the metaverse, will be one of the big shaping trends of the future. So what kind of developments do we actually see in a couple of years to come? Well, I think an important development is DeFi, the decentralized finance. And it has been around for a year and a half now. And I think that with liquidity pools and interoperable trading and so forth and so on, and if we can actually add that to real use cases which are currently being developed, then DeFi will be a big development, and also a development that is going to stay and will be increasingly competitive for banks. Also, the public and private partnerships. Public partnerships They have been around for hundreds and hundreds of years, and currently we see all kinds of new startups entering, and fintech companies entering the ecosystem. The old ones are not ready to give up the power yet. The young ones have a bark, but not yet a bite. So will they actually start working on a partnership because they not necessarily have the technical know-how, and the startups not necessarily have the financial resources of the customer network. So public and private partnerships could be a really interesting development for the future. And we also see that actually in public and private payment competition, nationally as well as internationally. Obviously, if you look at the SWIFT banking system versus the micropayment system of a company like Adyen, for instance. Adyen was 5 years ago, no one ever heard of it. Now it's one of the big unicorns in the payment system, and they actually grabbing more and more of the payment slices each and every year. And it will also be interesting to see whether we have an international cross-border currency competition. And with further digitization and issue of central bank digital currencies and issuing of local and national cryptocurrencies, that could actually, with the borderless components, fuel a competition of national currency. And as we now have the global reserve of the US dollar, is that a position that can actually be held and ascertained for years to come and for the future. With the further digitization, actually, it could very well be that the US dollar might relinquish its place, or have to share its place, or be less pronounced, pretty much for sure. And also stable coins, which are cryptocurrencies that are pegged to a specific currency, usually the dollar or the euro, will be becoming competitive towards the central bank digital currencies. One other thing I would also like to talk is about Libra. And 2 years ago, in 2019, Libra got announced as the Facebook coin. And a lot of people were concerned, to say it neutral, that a company that had $1.5 billion users would issue its own currency. That could be a significant change and impact on the market. When they first launched it, or that idea was first launched, they came as a permission blockchain-based payment system. And with offering a payment system for 1.5 billion people globally, well, that's more or less game over for a lot of other players in the market. So when they also introduced their own private currency, the crypto, the Libra, to it, a lot of people start raising eyebrows. More so that Facebook also said, well, this is just the first step, and ultimately we want to take over the payment system, we want to create a whole marketplace, and we want to link in telecommunications to it, venture capital, and more or less more and more bites into the whole financial ecosystem with a backbone of 1.5 billion people. Well, that's definitely something to be concerned about, especially if it's not fully in a regulated environment. Which, because Libra itself would make Facebook more or less the de facto central bank of the whole Libra operation, and the reception therefore was vocal and critical, to say the very least. Facebook is and was already not very much known and respected for its privacy, nor for its antitrust stance. So introducing the Libra coin was not something that turned out to be a walk in the park. And Facebook realized that, also have renamed the Libra project to DM. Well, you can put lipstick on the pig, but it's still Facebook trying to go into the market in that sense. So it's an interesting development, and also something that a lot of people are still very much scrupulously following to see what will happen there. So what's going to be the impact on the landscape, and what are the risks and the potentials we see? Well, first, if you look at the impact on the landscape, crypto will definitely increase efficiency in the payment industry. And efficiency is obviously music to the ears to everyone who works in the financial industry, because it's an economies of scale thing. The more efficient you become, the more profitable you become. The second thing that will be interesting now is trusted wallets. In the old days, you had a wallet, had some coins and some banknotes in it, put it in your pocket and held on to it. Now, if you go digital, we need to have digital wallets. So how are we going to create and establish and ensure digital wallets? That's going to be an issue we need to definitely address. We also see actually El Salvador recently adapted the cryptocurrency, the Bitcoin, as part of its national reserve. And I wouldn't be surprised if other countries would actually follow suit. And one of the interesting components is also that it has a deflationary component, as the supply is finite, is limited. So what's the potential? Well, individual control is going to be a really important issue, because the peer-to-peer transaction component, you and I can interact directly and create our own financial ecosystem, is going to be an important issue. Not being able to counterfeit or having immutable and not changeable transaction is going to be important. And it's also a disruptional component for the financial sector industry, but that can also be a threat. Because the financial industry might, in that sense, actually try to hamper the development of cryptos. But I think an important component is also the empowerment component. And I always need to think back of the introduction of the mobile phones. There were a lot of countries where people did not have a phone at home. So they skipped the whole phase of having a phone at home, but went straight to the mobile phone. And especially if you look at countries like Eastern Europe, when that got developed, or in Africa, a lot of people didn't have a landline, but went straight to the mobile phone. Now you see that certain countries in Africa or in Asia, people do not have access to a bank account, but all of a sudden they have actually access to their phone, have a wallet on the phone, can trade and share and be financially empowered. So if cryptocurrencies can add to financial empowerment, that will be a really value added, because the financial institution, in my view, and the financial infrastructure is a basic human right. And if cryptocurrencies can facilitate and promote that, that would be a big value added in my view. So what kind of risks do we have? Well, adaptation in retail, that's still lagging at the moment. That's a big issue. The uncertainty in the regulatory framework. What are the regulators going to do, and how are they going to look at crypto, and how are they going to treat the crypto? Also, the technology is not fully developed yet, and the point of the price volatility is still an issue. But coming to the volatility, price volatility is a big issue. So why would you actually buy a coin that can go up and down all the time? That's an issue that needs to be addressed. Because if you do not have a secure or stable value, people might be reluctant in buying it, which will have an impact on the economy. Let's say if I go to the bank and I draw 50 euros from an ATM, and that 50 euros today buys me 25 loaves of bread, and tomorrow it buys me 30, and a day later I can buy 10. That wouldn't give a lot of value or trust in that 50 euro note. So it needs to make sure that that is a store of value, and money itself is actually losing its store of value. In the past 100 years, if you had 100 years ago, you had a $1 note. At the moment, that would be 4.8 cents. So the value of money is depreciating because of inflationary value. So even money itself is not necessarily the store of value we actually seek. Gold, ironically enough, has more or less been that store of value since the time of the Romans. And some people claim that Bitcoin will also be the store of value for the future. I'm not going to speculate on whether it is or whether it isn't, but it will be an interesting discussion to follow. So where do we stand now? That's an interesting one, and I remember writing an article about this, and I came up with this diagram. We see more or less 3 regulatory clusters in favor of crypto and digital currencies, neutral or negative. And the negative countries are India, China, and the United States. Although the United States, not quite sure. Neutral is more or less Europe, and in favor is what I call the island jurisdictions like Malta, Gibraltar, Hong Kong, Singapore, Seychelles, Cayman Islands, but also Liechtenstein, Switzerland, where they see this as an opportunity to boost their economy. And they all 3 have different approaches to digital currencies. And we still more or less see these 3 flavors. So in favor, neutral, or negative. One other thing, and I realize it's not really 100% related to digital currencies, but smart contracts. And smart contracts are actually also changing the landscape, because smart contracts are quite often used in financial contracts, and they're self-executing contracts. And a smart contract is now actually in the state of Illinois in America being recognized in the Blockchain Technology Act. And the Blockchain Technology Act, which was passed a year ago, says that smart contracts is a contract that's stored, and it's just an electronic form, just an electronic record in the blockchain, but it's still a contract. So we need to see it as a legal contract. That it's stored in the blockchain doesn't make any difference. It's still a written version. It's submitted in the blockchain by 2 parties. So they had the intent to do so. They both agreed to do so. So therefore that can replace signature. So therefore it becomes a binding contract. So that's actually, the state of Illinois made a big step forward in the way we ultimately also going to view digital currencies, in my view. So and this I'm going to wrap up because I've already overshot my time. Apologies for that. So where do we stand finally? Well, we're coming down hard on crypto, but it's more the barking than the biting at the moment. The United States are actually testing the waters again. They just recently passed the Jobs Act, which allows crypto crowdfunding campaigns. We still see a lot of regulatory ambiguity. We see different stakeholders entering the discussion. So there's still this far from white smoke, so to say. 1 or 2 issues that's going to be a big issue in my view, and that's firstly utility tokens. Some are cloaked as security tokens, and that is definitely something that will be addressed. If you look at the Ripple case, for instance, in the SEC, that is definitely the writing is on the wall there. And one ominous, and I really find it an ominous trend, is that certain countries try to go after cryptocurrency exchanges. So they're not going after cryptocurrencies, they're not going after consumers, they're going after exchanges. And that is actually, in a way, smart of them to do so. So you don't need to go to the currencies itself or to the people, you just ban the exchange. And I find that a difficult position. And lastly, we've seen that Binance in the United States, in Europe, in Singapore, in the United Kingdom, was almost like an orchestrated attack from central banks towards Binance. And that, I think, that's not the way we should go about it. We should have the legal process in place. So my big takeaway for today actually is a simple one. We're standing at the ladders of digital currencies, and we might have Bitcoin for 12 years, but we're only just getting started to what digital currencies are. And yes, it is a step in the dark, but the ladder, we need to go up. And with that, I thank you for your attention, and please follow or engage with me on Twitter or on LinkedIn, and I'll be more than happy to engage with each one of you whenever I can and however I can. And again, thank you for your attention.
Thank you. Thank you, Hans. This was an extremely instructive presentation. shedding a lot of light into a conundrum of buzzwords and terms and misconceptions around digital currencies. And the fact is perhaps most elucidated by the fact that there has been a lot of questions coming up during your presentation, and most of them have been already answered in your talk. But I urge those who are participating in this session, the questions and answer section is still open. We still have a couple of minutes left, and I think there are quite a lot of questions which are related to cryptocurrencies and digital currencies in general. I see in the Q&A section 2 questions which we perhaps might start with. One is, how real is the first mover advantage for sovereign-backed currencies? Will the digital yuan dominate as a result, being the first mover, being the early adopter, and being perhaps an alternative way, because the yuan has not yet achieved the quality of a reserve currency, but perhaps the digital yuan might. And the political implications, I fear, actually would be vast.
Yeah, if I may start the conversation on this, the digital yuan is in my view more a political than a financial instrument. And in all honesty, I prefer to stay away from politics or to people's personal opinions. I don't want to be judgmental about people's personal or political beliefs. That said, I do see a strong link between the central bank digital currency in China and the agenda of the Chinese Communist Party. And they cannot be, you cannot see them apart from each other. And the social credit system, for instance, which is already in use in China, would be greatly and even further and massively helped by a digital currency. So we can actually see, monitor and track people's movements and spending. You have the ultimate tool for the social credit system. So from a really skeptic perspective, you could say it's going to be a political tool. From a financial point of view, I can actually see that it would be of great value and of great use and of great potential for the people in China. Whether it's going to be an international respected currency or appreciated currency that will be used internationally, I can see a use in tourism. But other than that, I cannot see not that much value added for us consumers here yet.
Mm-hmm. Just by the way, Christian and Alexander, if you want to add additional points to that, feel free. It's an open discussion and a panel.
Yeah, because, and again, if I may, I'm not trying to be negative about a political climate or political choices. That's not for me to be judgmental about. It just fits in the approach of the Chinese Communist Party. And we also have that skepticism in Europe that a digital euro could possibly be used for micromanaging and micro-monitoring people's movement.
I think, sorry if I can say something.
No,
well,
absolutely.
It's interesting. It was one of your slides, the overview of who is more critical, who is more positive towards digital currencies. And China is obviously on the negative side.
Yeah.
On the other side, they issuing their own currency. So it's controversial a bit, and just about control.
Yeah, I think it is. And that's you know, you see the same thing with I think control is the key word here. And social media, you can only be a social media company in China if you actually comply by, you know, a Facebook, a Google, a Twitter, a YouTube cannot operate in China. and only a Chinese version can. So yeah, it is ultimately about control. And if you look at why cryptocurrencies are more or less invented or were a response to, was the drive and the need for individual and peer-to-peer freedom. And that would be that's slightly different than what the Chinese Communist Party envisions, in my view. I can't put it more neutral.
Yeah, actually, we don't have to look exclusively to China to see that the need to control a development is quite often the driver. If we look at Venezuela, for example, Venezuela, there it was on the verge of having factual Bitcoin as a parallel currency in the country, and then Venezuela, simply the government started to set up some sort of digital currency just to diffuse the risk of having people just moving out of the monetary system of the country, and therefore simply putting their money somewhere else instead of in government bonds or whatever, because Venezuela has a high inflation and people wanted to escape that risk. Which brings me perhaps to the question of inflation, which you already discussed. You pointed out the deflationary aspect of digital currencies, but actually, notably in these countries where we see a broad use of cryptocurrencies, it shows that people accept these cryptocurrencies as an equivalent for a normal traditional currency, which means if people accept it as an additional currency from a monetary point of view, we have to add the amount of classic currency and the digital currency, which is in that country, weighed against the existing assets. And according to the classic inflation definition, if we have more currency in a country, but we haven't got more assets, we have inflation. So I actually see also a risk that if there is a free decision for everyone to issue digital currencies, and if these digital currencies start to have this value of an alternative currency, there will be inflation because somebody else is issuing money apart from the central bank.
Well, and not, first of all, not all cryptocurrencies are deflationary. And an important factor that contributes to a deflationary component is the supply. And if you currently look at our monetary supply, this year alone, the European Central Bank and the Federal Reserve in America issued, I think, $7 trillion. Made money, boom, put in the market. There is a new infrastructure spending bill discussed in the United States of $3.5 trillion. That's money that isn't there, that's just being thrown into the market.
Yeah, with
Bitcoin has 21 million coins. Digibyte has 21 billion coins. That's it. Never more, never less. That's it. The supply is finite. That's a deflationary component. Secondly, some crypto projects also buy back and burn coins. So they actually reduce the supply. And reduction of supply has an increased value effect. So the monetary system itself is inflationary by default. So
I fully agree with you. I fully agree with you that the monetary system, even if we look at the statutes of the central banks, it's not that stability means zero inflation. Stability means something below 2% inflation. So clearly, in the long run, there is always a certain degree of inflation. And you are right that individual cryptocurrencies, by their limited number, have a deflationary aspect. But if I look at the at the picture as a whole, I see not one limited cryptocurrency, but I see thousands of them, which means that clearly, if I have only 21 million Bitcoins, they have a high value. But if I simply set up Bitcoin/A apart from that, and then start with another 21 million, I will simply have the double number of cryptocurrencies. So I think I wonder, or no, I don't wonder that central banks are having a critical view on this sort of private printing of money, and that there will be regulation. I wonder why there hasn't been more regulation so far, because there is a substantial amount of value already in, say, the 2 or 3 big cryptocurrencies. And it's simply that perhaps the central banks don't have the technical means to prohibit it, and they don't have the technical means to measure whether and to what extent this additional money generates inflation, because the traditional means of valuing inflation are based on the amount of money which the central bank hands out and the amount of assets which exist in a country. So they simply would have to first adapt their entire mechanics and arithmetics of valuing inflation to be able to act.
Yeah, correct.
There's one question here, which is perhaps related to the topic of inflation and deflation. How are stable coins kept stable? Is it a bit like the special drawing rights of the International Monetary Fund? Are they linked to a bundle of classic currencies, or how are stable coins?
Stable coins are pegged to a currency like Tether or USDC or USDT. They're pegged to the US dollar.
Okay. There is one further question in this context. How are peer-to-peer markets likely to develop? It may perhaps be linked to the general question, what will big government do with respect to cryptocurrencies, because peer-to-peer markets are clearly the alternative, the alternative to governmental issuance of currencies.
Yeah, well, all 3 of us have been talking about peer-to-peer markets. Me from a crypto perspective, Christian from the shipping perspective, and Alexander from the real estate perspective. And I see DeFi, decentralized finance, as the big new peer-to-peer market. But the whole idea of decentralization is that you slash away the middleman, disintermediation, and you see that in all sorts of applications. And one of the big applications I see, and that is not financially related, is what's called self-sovereign identity. And if ever we need to have a theme for next year, I would definitely like to volunteer SSI, self-sovereign identity, as the big theme for IFCLA to have a whole conference about self-sovereign identity, because that's decentralization and peer-to-peer to its own. I share my data to that person who needs it on a need-to-know basis, on a time-to-have basis. Self-sovereign identity, and that is a peer-to-peer concept of privacy in its ultimate form. So, if I may make a suggestion for next year, SSI, self-sovereign identity.
Interesting topic. We have had that discussion already in the past, because it's not absolutely new. It has been coming up in the past in different concepts.
Yeah. And
I don't actually know why it hasn't yet flourished in the market, because clearly it sounds like an extremely interesting and intriguing solution to a lot of problems regarding data and data transfers. But perhaps the existing players in the market would lose so much of their power that they are simply not interested in promoting it.
Yeah. If I may answer one question, I see, is Libra still in contention? Yes, very much so. I think Libra has already rebranded into DM. So we've all forgotten about, we all have forgotten about Libra apparently. So we know, but they're still very much in contention, and behind the scenes they're definitely working very hard, because there's so much to gain for a company like Facebook. And Facebook, as a big tech company, realizes that the landscape is changing and that the regulatory balance is shifting not in their favor. So if they need to act, they need to act really fast or diversify really fast. And for me personally, my biggest fear would be that a company like Facebook would go to, you know, one of those small islands in the Pacific or in the Caribbean and say, yeah, Mr. President, here's $10 billion, you can have it, but from now on, your national currency is going to be, you know, the Libra. Then all of a sudden Libra becomes a regulated and internationally accepted currency that can be used by 1.5 billion people. I'm not saying that will be game over, but that will be a big impact. So are they in contention? I think very much so. Yes.
Interesting point. I always heard the rumors that 1/3 of Bitcoins are owned by North Korea, which is perhaps simply a rumor, but it seems that already that some countries which are rather sort of the outcasts have already entered the market.
Yeah. Well, I do hear the rumor that there have been some hackers and miners active. So who knows? Yeah.
Huh. Well, unfortunately, our time is drawing to an end. Even if there would have been a lot of questions which we might want to discuss around digital currencies, we haven't talked about the intrinsic cost. Not only the transaction cost, which has to be directly paid by the buyer to the seller, but the intrinsic cost of climate influence on climate by the enormous software hardware power needed to calculate that. But I understand that even there are cryptocurrencies which are trying to tackle that issue, but not blockchain, but not Bitcoin. Bitcoin is always sort of the black sheep in this respect. Well, as our time is drawing to an end, and IFCLA has to keep its timetable because there's still the General Assembly coming up, I have to thank all of you for an extremely interesting session, which at least me personally, brought up to speed with the day-to-day developments in different areas of the blockchain and its uses. Thank you very much for being with us. I assume that we will send out an email to the speakers. So those speakers who would like to share their slides, we would hand them then out to the participants or publish it on the IFCLA website, because I think this is knowledge which should not get lost. Thank you very much. Hope to see you tomorrow, and most hopefully see you next time face-to-face in our next conference.
Will be absolutely my pleasure.
Thank you.
Thank you, everybody.
Thank you. Bye.